everyone, and a very good evening. You're watching the TMS Budget Special Edition. I'm Mubina Kapasi. This is going to be your opportunity to connect with us and our series of experts on all the questions that you have on the Union Budget 2021, everything that FM Nirmala Sitharaman has announced, how it would impact your wallet, your investments, and of course, more importantly, your tax bill. Today's show is going to address the three components of taxation. One, direct tax, and of course, all the incentives for home buyers. The second, indirect tax, and that's essentially understanding what's the new custom duty and excise duty structure. Is it going to increase the prices of any products? And finally, of course, personal finance and your investments, especially given the fact that after the budget was announced, we saw a sharp spike in bond yields. So how exactly would that, impact the different categories of more specifically debt fund holders? Because usually when we see volatility in bond yields, it does tend to directly impact debt fund holders. Different durations of debt fund holders, because remember, under the umbrella of debt funds as well, we have several kinds of, categories. So we'll be understanding that and more, and sort of just get you a gist of how you can position yourself in the proper manner to create wealth in the long-term direction. So first up, let me tell all our viewers that our phone lines are open. You can call us on 6754 9456. That's our telephone number. I'll repeat it once again, 6754 9456. And we will get your questions answered by our series of tax experts, as well as, of course, a special guest for today. But first up, let me tell you then about some very interesting trivia about the budget this time around. Firstly, did you know that this is in fact Finance Minister Nirmala Sitharaman's shortest budget? Her first budget was the interim budget of 2019, which was announced in July. And that one really was a medium-sized budget in terms of the duration of her speech from the time that she stood up to present the union budget. Then came the Feb 2020 budget, which was definitely the longest, not just during her tenure, but the longest we've seen in an extremely long time. And this one was a nice, short and crisp budget. Secondly, of course, this budget went completely digital in the sense that it was not read from a usual Bahi Khata, but on a tablet, keeping in mind, of course, the direction that the country, the world is taken. And of course, secondly, the fact that we are in the midst of a pandemic. So let's start off first by introducing on the show Lakshmi Iyer of Kotak Mutual Fund. Lakshmi, thank you so much for taking our time today on the Money Show to talk to us about, the budget and everything that the retail investor, the common man, should watch out for. So Lakshmi, to start with, before we delve into the details, let's understand, what did you think of the budget, and the various provisions that the FM laid out?
Hi, good evening, Mubina. So firstly, there were a lot of expectations embedded into the budget, depending on which lens were you looking at the budget from, whether as a retail investor, as an Aam Aadmi, as an institutional investor, as a foreign investor. I think on most of these counts, the budget has been pretty, comprehensive. It has been quite pragmatic, I would say. The assumptions have not really been too very stretched. And pretty much every sector, which is a potential, I would say, which has the potential to show a significant upside in the aftermath of the COVID hibernation phase. I think all those sectors have received enough attention. So I think it was a fairly pragmatic budget, and as you rightly observed, it was delivered in the shortest span of time compared to the previous budget timings. So I think all in all, reasonably okay is what we would, sense it from an investor standpoint.
Lakshmi, let's talk about then, we in fact had just spoken to you last Friday to sort of help our viewers brace themselves on what they can expect and what are the portions of the union budget that they should watch out for to sort of decipher what will be the impact on their finances. So let's talk about that borrowing number and the fiscal deficit number. For the equity markets, of course, I think they were pretty pleased with that high fiscal deficit number, because it essentially means that the government will be spending money and they will essentially be, doing what they need to do to, push forward for growth, etc. However, how would you read into this fiscal deficit number with respect to the debt mutual fund holders. A lot of retail investors invest in a series of different duration debt funds. So what would be the likely impact? Because as soon as, when this number was announced, we did see a sharp spike in bond yields. So explain that to, all the retail debt fund holders.
Absolutely. So I think from a pure layman's perspective, there is a revenue pool for Government of India and there is an expenditure. The net number is in the deficit, and which is what gets labeled as the fiscal deficit, because there is a shortfall in expenditure, and that shortfall in countries like India, for example, are financed or funded captively. What I mean by that is the Government of India actually comes to the markets to do its borrowing program, and which is what we call the government borrowing program. So today the announcement actually saw that cross borrowing, the total amount of money that the Government of India will borrow from the markets for FY22, that number came in at 12 lakh crore. Second thing, they also announced that they will borrow additional 80,000 crores for this financial year. Now, this financial year has 2 more months to go. The month which has just begun, which is February, and the month of March. So imagine in 2 months, the government is going to have 80,000 crores more of additional supply of government bonds. Now, that clearly spooked the bond markets, which is why we saw the yields rise almost 15 basis points, or almost 1 rupee of correction we saw in bond prices at the longer end, and of course at the mid end. So that has been the knee-jerk reaction. I think going forward, what it means for bond or retail bond investors who are investing via mutual funds, etc., is yes, today there has been a knee-jerk reaction. However, one needs to keep in mind that volatility is something which is going to be quite commonplace for bond markets going forward. We have an upcoming monetary policy by Reserve Bank of India on 5th of February. So wait and watch out and see if they have a game plan of how they are going to calibrate the supply. And most importantly, will the Reserve Bank of India continue its open market bond purchases? So they buy bonds from the market, and that is a source of demand. So I think volatility, yes, today after this move, you could see mark-to-market losses or negative returns on bond funds, but that's okay. As I said, if you are a long-term investor in line with your investment horizon, then these volatilities are obviously to be seen as opportunities.
Excellent. Well, you know what? We've got our very first caller as well now. We have Kamla Deepa calling in on the phone lines. Hi, Kamla. Thank you for calling in. What's your question for today?
I wanted to know how is it going to affect our yields from mutual funds, equity market or debt fund? How will the returns be?
Okay, all right. So, Lakshmi, I think you vaguely did answer the the question, but if you could just, for the benefit of Kamla, sort of reiterate what can she expect in terms of returns, in terms of yields from her debt funds?
Yes, so as I mentioned, if you're just talking about today's move, the yields on the bonds across the curve has moved up, which means the prices of these bonds have come down. So an immediate reaction, if you actually open your account statement tonight or tomorrow, that for that particular day or a one-day movement, you will actually see a negative return. However, as I mentioned, in line with this, the overall portfolio yield also stands to increase. So your portfolio starts earning that higher yield from day one, and therefore it is very important. So if you put in money yesterday or day before yesterday, and you have a one-year investment outlook, nothing of that changes after today's move. So that's the way I would look at it, from an immediate impact and from a slightly long-term impact perspective on your debt portfolio.
Okay, and I hope this essentially helps a lot of our viewers. I'm sure many of you all have this common question. If you want to know about any specific debt fund category as well, you can call us, like I mentioned. Okay, we already have another caller, Jitendra Kumar, who has a question once again on mutual funds. Jitendra ji, thank you for calling in. What's your question?
मेरा प्रश्न है, ये बजट के दौरान बॉन्ड यील्ड में काफी बढ़ोतरी हो गया है.
Yes.
और इससे डेट फंड काफी प्रभावित हो रहा है. तो इस समय क्या स्ट्रेटजी होना चाहिए बॉन्ड फंड में इन्वेस्टमेंट करने के लिए? किस तरह का बॉन्ड फंड में इन्वेस्टमेंट कर सकते हैं?
Okay. So yes, Lakshmi, Jitendra ji's question is very valid. कि किस category of debt funds में invest करना चाहिए? Also, let's keep in mind, like you mentioned in the earlier answer, RBI will make, what kind of actions will the RBI essentially do in the next week, sorry. And of course, Lakshmi, if you could reply in Hindi, please.
No, Meena, absolutely right. जितेंद्र जी, आपके जैसे लोग और कई सारे लोगों के ऐसे ही सवाल है कि आज के मूव के बाद क्या डेट फंड की क्या स्ट्रेटजी होनी चाहिए. एंड माय आंसर इज अगेन नो डिफरेंट फ्रॉम व्हाट आई आंसर्ड अर्लियर. प्लीज कीप इन माइंड योर इन्वेस्टमेंट होराइजन. अगर आपके पास 1 साल या 3 साल की अवधि का पैसा है तो आज की वोलेटिलिटी से आपको कोई फर्क नहीं पड़ना चाहिए, क्योंकि द बॉन्ड यील्ड्स जब बढ़ते हैं, द यील्ड जो पोर्टफोलियो की यील्ड है ना, वो भी बढ़ जाती है साथ में. तो इन फिक्स इनकम पार्लांस हम जैसे बोलते हैं, पोर्टफोलियो की कैरी बढ़ जाती है, यानी वाईटीएम बढ़ जाती है. सो देयर इज नो रीजन टू गेट इम्पैक्टेड एडवर्सली आफ्टर टुडेज आउटकम. We will watch out as portfolio managers what will happen in RBI's monetary policy, और वहां और थोड़ा खुलासा होगा और उसके हिसाब से हम हमारी स्ट्रेटेजी प्लान करेंगे. बट एज एन इन्वेस्टर, एज आई सेड, प्लीज स्टिक टू योर इन्वेस्टमेंट होराइजन, और ये जो वोलेटिलिटी है उसको नजरअंदाज करेंगे तो ओवरऑल पोर्टफोलियो प्लानिंग के लिए ठीक रहेगा.
All right. Well, ladies and gentlemen, keep your questions coming then. Our number is 6754. It's been a while actually since we've started this call-in show, but 67549456. Okay, Lakshmi, actually there's another very interesting announcement that came in from the budget, and that is about the creation of an asset management company. We were expecting something like a bad bank that will be announced, which will essentially buy stressed assets or basically those securities and those companies that are going through obviously a tough time. Now there's an asset management company which is going to be announced. It's going to be like a framework which will be announced, which will buy all these stressed assets. So, how do you think this will essentially help maybe even a credit risk fund? How will it even deepen the corporate bond market, according to you?
So, there is a thought which is being, spoken about, and we saw glimpses of that in the budget today, where there will be a framework devised for buying actually investment. Now, bear in mind, and I think this is for the benefit of the viewers also, it is not necessary that every bond which is high in grade has necessarily got to be AAA. There are non-AAA bonds above investment grade which are reasonably good businesses in their respective domains. So I think today's move will also help the case or the cause for such category bonds and help build in or bring in more liquidity for such category bonds. And secondly, on your particular point, credit risk funds typically invest predominantly in the non-AAA or the under AA kind of assets, reasonably high grade. There is a strong case for spread compression between this category bonds and the AAA bonds. Of course, this is not likely to happen overnight, but we're talking about over a period of time. These announcements such as these, and as we see the walk the talk, we could see potential benefits of that coming into the capital markets for specifically this bond segment.
All right. Excellent. Well, folks, unfortunately, we're a bit short in time. We've got lots of guests coming in right here on ET now as well to talk about the budget. So, Lakshmi, we're still getting so many questions in. We'll sort of get this interview going once again in the next week, for you. But thank you so much for joining us and, helping our viewers out with their questions and queries on the union budget. Folks, like I mentioned, you can always send in your queries on the Money Show at etnow.tv, and we will get them answered over the course of this 1 week. We'll take a very short break, but when we return, we are going to be addressing the all-important segment when it comes to union budget, and that is taxation. Well, here's a bummer. No big changes in the personal income tax slab, but there are a few tweaks, especially ease in tax compliance for all of us. So we'll be addressing that. We'll also, of course, take on board any question you may be having on income taxes right after this very short break.